like welcome Mr. Mario Singh. Please come up to the stage for your presentation, please.
Hello. Okay, did you have a good lunch? Are you awake? Yeah? Okay. Now let's go for part 2. All right? Before I talk about money management, I need you to understand the 3 laws. Okay, I'm going to draw something for you. In trading, you need to have 3 circles. Okay, the first circle is money management. Okay, this circle is strategies. And this circle is state of mind. Let me explain. Strategies means how do you enter the market? Do you buy here? Do you sell here? Do you stay out? Okay? All that is strategies. Tomorrow we will talk about strategy. Okay? I'm going to show you some strategies for you to immediately start trading the Forex market. Today, now, I'm going to talk about money management. Money management means how many lots do you play? Should you trade 1 lot, 5 lots, 10 lots? You need to know the formula how to calculate. I'll show you the formula. And state of mind means how you control your emotion. When the market is going up, you should not sell, sell, sell. Right? You should only buy, buy, buy. So this is how you control your emotions. All 3 are important for you to become a good trader. Right? Now, I will cover these 2 in these 2 days. By today, I will cover money management. Tomorrow, we will cover strategies. State of mind can only happen when you start trading. Then I'm able to coach you. How do you control your fear, hope, greed? How do you control all these emotions? So it's very difficult to teach this. This can only happen when you start trading. Okay? So let's talk about money management first. Let me start off by giving you an example. Let's just say if you start trading with $2,000 US. Okay? Now, here's the first question. When you lose your money, when you lose, say, 10%, is 2,000 minus 200, you get 1,008. From 1,008, you want to bring it up back to 2,000, you have to make about 11%. Okay? It's not 10% because 10% of 1,008 is only 180. Right? So you need 11%. Now, what if you lose 50% of your money? 50% means from 2,000, you lose 50%, you're down to 1,000. Does anyone know from 1,000 how much do you need to make to bring it up to your original amount? Correct, it's 100%. It's 100%. Okay? And in the worst case scenario, if you lose 90% of your account, you're left with only $200. Do you know how much you need to make back? You need to make 900%. So the first concept I want to teach you is that it is very easy to lose money, but it is more difficult to make it back. You need more time. You need to have more winning trades to bring it back up. So many people are very interested how to make money. But I need you to understand that not losing money is also important. Because if you trade wrongly, if markets are going up and you sell, 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 and you lose a lot of your account, what will happen is that you need a lot of time for you to build your account back. For those of you who have started trading, you will understand what I'm talking about. You can have a very nice, you make a lot of money, but because of 1 or 2 stupid mistakes, you end up losing more than half of your account. And all the effort that you took to build the account has all been wasted. Okay? So by listening to money management, I hope you guys can understand how to protect your account. Right? Now, let me ask you a very important question first. Why do so many traders blow up their trading account? There's more people who lose money in Forex compared to people who win. At least 80% of the people lose. So 80% of the people lose, 10% may break even, the other 10% will win a lot of money, right? Before you start thinking, oh, does that mean I will always lose? No, switch your mind. Tell yourself you want to be part of the 10% that is making a lot of money. All right? The people who lose, they will always lose. I don't know if you, some of you were in the press conference yesterday, and I mentioned that there's always a 80-20 rule, right? Have you all heard of the Pareto principle? This is called the Pareto principle. Pareto principle is called the 80-20 rule. If you want to be let's talk about business. Does anyone know, okay, have you heard of names like Donald Trump, Richard Branson? Have you heard of all these names? Are they billionaires? Yes, right? But does everyone who start a business, will you become a billionaire? No. For every Richard Branson, for every Donald Trump, for every Bill Gates, Warren Buffett, Carlos Slim, for every people in the 20%, there's obviously 80% who didn't make it, correct? Yes or no? You never hear about them because you don't hear about them. They've already failed. So that's 80% in the business world. What about in the entertainment world? You know, will everyone be a Ellen DeGeneres? Will everyone be a Oprah Winfrey? No, it won't be. 80% of people will fail, right? So what I'm trying to tell you is that the percentage in Forex is the same. Same. 80% will lose. But let's not focus on the 80% of people who are losing because they don't know what to do. After these 2 days, you will know what to do. Let's focus on being in the 20%. Is that clear? Yes? So, the question I want to ask you, why do so many traders blow up their trading account? It's a very good question because if you don't know why, you will always end up losing money. Always. So I'm going to answer this question for you today, all right? Let me talk to you about brokers. Brokers are people, when you start trading, you will fund your account into a brokerage firm, okay? So to be successful in trading, you need two ingredients. You need to have very good knowledge. You need to have a very good broker. Both are important. If you have a very good broker, but you don't know how to trade, you will still lose money. If you know how to trade, but the broker is screwing with you, okay, you will also lose money. You need both. Clear? Yes? If you feel like sleeping, do some push-up, okay? So you can wake up. I know it's after lunch, right? The session after lunch is always the most difficult to stay awake. Now, so let me tell you, so let's move on, all right? Why do so many people lose money? Number one, many brokers will tell you you can open an account between $2,000 to $3,000. This is what many brokers will tell you. And then you know now that one pip is 10 US dollars, right? Everybody knows this. But what is the reason when you, within a week or 2 weeks of opening your account, you end up having a margin call? You end up losing your entire account, okay? And the people who lose their account, they will end up saying the Forex market is risky, it's nonsense, this is not for me. The main reason why people think Forex is risky is because they don't know how to calculate their lot size. Okay? There are basically three groups of people. Is my speaking okay, friends? Yeah? So there are three groups of people. I want to show you how people calculate their lot size. Do you guys know what is lot size? That means each time you click buy or sell, do you trade with 1 lot, 2 lots, 5.2 lots, 6.8 lots? How should you calculate it is very important. Okay? Because if you don't calculate it properly, in the previous slide you saw, if you lose more, you have to spend a lot of time to build your account back. So there are three groups of people. Now let me show you who are these three groups of people, okay? The worst group is people who don't calculate their lot size. Don't calculate meaning to say for each trade, they just sometimes they put 2 lots, 5 lots, 10 lots. They don't calculate at all. The second group is people who do calculate the lot size, but they calculate it wrongly. The first group is obviously the people who calculate the lot size correctly. Okay, now, let's not even consider this group, because this is the worst group. Today, I want to show you how 80% of the people are calculating their lot size wrongly. Okay, so after you understand the mistakes that they are doing, then you know how to avoid this mistake, and then you will know how to calculate it correctly. So let me talk about how people calculate their lot size wrongly. Right? How do most of them trade? Let me give you an example. Let's just say you open up your trading account. Right? Let me give you an example. So you may open it up with $3,000 as an example. You choose leverage of 100:1, which is a very common leverage that you will choose anyway. And this is the mistake. The mistake is that people, how they will calculate lot size